Alright, good afternoon everyone. Today is Wednesday, November 14th, 2012. What I'm going to do today is, I'm not going to go over every single trade for the last 3 days, but I'm going to go over the net of the results for the last 3 days, because this is the first recap I've done in 3 days. Yesterday I had a veterans thing to go to, and Monday was Veterans Day, so I was unable to get in here to do the recap. But let me give you the results for the last 3 days. On the ES, we were minus 8 ticks for the last 3 days. On the NQ, we were plus 13. On the YM, we were plus 9. On crude oil, we were plus 10. On gold, we were plus 14 ticks for the last 3 days. I don't think we took any Russell trades. We didn't take any soybean trades, though there were a ton of them that happened. We didn't take any of them. And those are the results. Before we go any further, let me say if you have not taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. All we ask for in there is your name and your email address. With the free trial, you get 5 days in our live trading room, and you get access to everything you see here, and everything you hear, for that matter. You get access to Dwayne and I. You get access to the live trading room. You get access to all of our charts. You can download the charting platform. You can download our indicators. You get to use them, play around with them. See what we do, how we do it, live for 5 business days, 2 hours a day. All you have to do is just go to www.cfrn.net/apply, sign up. Okay, simple as that. For everyone who is in here who is on a free trial, or who was on a free trial last week for that matter, you should have something in your inbox telling you how to become a partner. If you do not have something in your inbox and you want to know how to become a partner to get into tomorrow night's partners meeting, send us an email at support@cfrn.net. Okay, support@cfrn.net, and we'll be glad to forward that info off to you. You can also call Bert and or Leslie at 866-928-3310, and they will they'll help you out there too, okay? They'll forward you over to me and let me know. All right, again, Bert and Leslie's number is 866-928-3310. You can call that number, and they'll either forward you to me or they'll give you the information you need. Let's see, on to the trades, okay? This morning, we only took a couple of trades this morning. We took a crude trade and an NQ trade. I'll show you the NQ trade to start off with. Okay. There were a bunch of opportunities. I didn't get all the opportunities, obviously, but there were a bunch of them, and I'll point a bunch of them out to you. All right. And right in here is where I took my NQ trade. We came up, we hit the BBC, we had a down close. Now there were two things going on right here. One is that we closed below the trend line, and the other is that we hit the BBC after a bearish cross and had a down close with bearish divergence. Okay. So we had the bearish divergence right there, the down close, and we closed under this trend line that I drew. All right, you're going to see me drawing these trend lines a lot from now on, because I think that there's a lot that people are missing with respect to the trend and how we pretty much always trade with the trend. We do have a counter trend trade at the weekly trading zones, but in here what I'm going to show to you is all the trend trades that we do, because we pretty much always trade with the trend. That said, these little pullbacks are small opportunities. Not you directly, Frank. That said, these are small opportunities to enter into a trade. Okay, the market is trending, and in any trend, you don't want to just jump in and catch the falling knife. Attempt to catch a falling knife. You want to wait until that knife slows down, maybe even pulls back a little bit and stops. Gives you an opportunity to get a firm grip on it, and then get in. Okay. The BBC, explain what the BBC is. The BBC is a bull-bear cross. That's what BBC stands for. When you get a cross of the MA1, which is this other blue and red line right here, when you get that crossing down below the BBC, that tells you what direction to be looking in. Okay? Look for the shorts when that crosses down. Look for the longs when it crosses up. In this particular case, it crossed down. We were looking for a pullback up, tested the BBC with a down close, and bearish divergence, and there it is right there. Okay? There was the opportunity. We shorted right here. We took profit. We put our target one tick above this swing pivot right here. Okay, we got down there, took that profit. There was another opportunity to enter in here if you want to be real technical about it. on the down close, when that trend line broke right there, we were still trending down, and this was the pullback. That trend broke right there. There was another opportunity right in here. It almost touched the BBC, but not quite. Normally we would say we're not going to take this trade because it didn't hit the BBC, but if you wanted to take the trade because it closed below that trend line, this little pullback, this pause in the action, you could have taken it there, you could have done it again there, and over here, lo and behold, the MA1 crossed up above the BBC. So we're not looking for shorts anymore, okay? Not looking for shorts. There was an opportunity in here somewhere for a long trade. This was right on the news event. I didn't draw any trend lines in here. I must have been doing something else. But the up close right in here gave us a little bit of profit before it pulled back. Crossed down again. More opportunity, and right here there was more opportunity on the downside right there. We had bearish divergence to support that. Okay. Craig B, no. Okay, there's more that goes into it than that. And right here was an opportunity to go down. We would have been looking for the same thing right here, but it went right through the BBC, right up to the yellow brick road right here where the red spot is. We would have anticipated that red spot to hold at least for 1 bar's profit, but it did not. And we would have anticipated that because we did get a lower low off of this one. All right. Let's see. All right. All right, here we go. We had a bullish cross here and a pullback down. Now in here there were a couple of opportunities. It didn't actually hit the BBC. We did have the bullish divergence down here. All right, when I say divergence, I mean divergence between this indicator alone, between the cycle and the green line. All right, so we didn't hit the BBC though. Normally we'd wait for it to hit the BBC and give us an up close. In this case it didn't hit the BBC, so you could have just waited for the up close above that trend line, taking a little bit of profit on that. All right. Let's see, it did the same thing over here. We wouldn't have been looking to take this trade right here, okay, because the cycle is red and headed down. And we wouldn't have anticipated that these were going to hold right here. These blue spots were going to hold because we didn't get a higher swing off of this one. All right? Does that sound like there's a lot of rules? It's really not. You know, it sounds like there's a lot, but there's really not. I'm saying the same thing over and over and over and over and over again. Okay? If we take this like one little piece at a time, I don't really want to do that right at the moment, but if you take the free trial and you get in the live trading room, I would be happy to. If you become a partner and go into the partners meeting, I would be happy to do that too. But you can see right here, I drew more trend lines. We were looking for it to get down below these trend lines, above these trend lines, whatever the case may be. Okay? There was a ton of opportunity in here on the NQ today. I only took one trade because I was looking at 8 markets all told and answering questions and lots of other stuff. But that said, there was just another opportunity right here. Now we're looking at the same exact thing across. This is a 4-tick range chart on the NQ. It's not a 4-tick chart. It's a 4-tick range chart. What that means is every single bar is 4 ticks in height. Every single bar has a range of 4 ticks. Okay, that's not 4 transactions. That is 4 ticks of price movement. Okay. Let's see. All the 4-tick range charts use the same exact stuff. Same setups, same everything. Okay. So everything I just did here on the NQ, you can bring over here to crude oil, we'll say, because crude is the other place I took a trade this morning. Let's go back to where I actually took that trade. It was right in here. This was the actual trend line, but this is the trade that I took. We had some bullish divergence down here on the bottom. Tested the BBC with an up close. I took the trade. I got long. I took some profit. It did give me 10 ticks profit at one point. I had moved my stop up to plus 4 ticks, and I got out over there with plus 4 ticks on that one. You can see that it came back again and did it again right there. This up close was the spot to enter on that. I'm looking for it to continue the trend and keep going long. It didn't continue the trend. Turned around, came down. There was a spot over here, right here, to get short if you wanted to. Didn't continue the trend. Went long. We missed this over here. There was like 1 or 2 spots in here where you might have been able to do it, but this moves so fast that I don't think you would have been able to get in there. Okay? In here, once it pulled down and it started to draw a trend line, or it started to trend back toward the BBC, you had bullish divergence and everything else. The entry would have been on the up close above that. Okay. Again over here, same thing right there. And again over here. Okay. So the up close above this one, which would have been right here. The up close above this one, which would have been right here. Again over here. All this was very quick this morning. Okay, this was the up close above it for the move up. And then it all turned around and it came down. Now over here I was trying to draw these trend lines in and take the trade, and I couldn't do both. So I didn't do either. Actually, I wasn't doing that right there. I was trying to draw the trend lines in, and where was it? When it had turned around. I guess it was. No, that's not the big move from the morning. The big move from the morning. Where the heck was it? Here it is. This is the big move from the morning. That was a big move during the break. Sorry, this was the big move from the morning. I knew I was trying to draw trend lines in when it had crossed down over here. This was the trend line right here that I had drawn in this morning. But you can see on the big move this morning, it did the same thing. Okay, once you get up here, there's opportunity there, and in here, and in here, and in here. All right, I can't emphasize enough how important these things are. Now, every one of these trend lines, you may see, well, it may seem like I'm just randomly drawing these trend lines, but I'm not. The approaches to the BBC is where I'm drawing the trend lines. Okay. So once we start to move, we get the approaches to the BBC. There's a couple of ways to enter. One is with the bullish divergence and a test of the BBC, and then an up close. And you can see we had bullish divergence all over the place in here. Okay, there, and here, and here, and here, and even over here. All right. Then it reset, and we had bearish divergence, and it started to go in the other direction. And there were a couple of opportunities in here with the bearish divergence. Okay. Right there, this is the down close below it. Okay. So there was a ton of opportunity today, and that's crude oil. And you can see I've drawn in different things in here, other ways you could enter in. You really have to experience it. You have to take the free trial. The trial is free. All you have to do is go to www.cfrn.net/apply. Give us your name and your email address and sign up. Simple enough, and we'll get you in there. Okay. The same stuff happened with gold today. All right. The same stuff happened with soybeans. So for those of you guys who trade the beans, you see all these trend lines that I drew in here on the soybeans, and that was this was a little early, a little pre-market. This was at the open right here. This first move down, the second move down, no move up. Then we were looking over here. We started drawing the trend line on the way up, but it didn't happen. Then we drew a trend line on the way down, and the close up above that is what you would have been looking for, so right in there. But it's gone pretty much flat right in here. Okay, so we wouldn't be doing anything with that. Soybeans we've done. I'll show you a little bit on the Russell because I know some of you guys are Russell traders. Let's see, on the Russell, the same stuff. All right, the same exact thing. Okay, all these opportunities in here on the Russell. I think the last one that I actually pointed out was 780.9. Is that what it was? Yeah, 780.9 right here. This short was the last one that I pointed out in real time. And this one right here, I think I missed that this morning when that one happened. But then you see it changed directions and it came back, tested the BBC with bullish divergence, the up close. Could have gotten long right here. Okay. Let me draw a trend line. There were two things happening over here. One is you get the up close. You could have gotten the up close right there and gone long right there based on the bullish divergence and the bullish cross. Or you could have waited for the up close above the trend line, which would have been right over here in the same exact spot. All right. Right there. Okay, for that move up, to capture that move. The next thing that happened is you got a blue area here. It pulled right through the BBC down to the blue area. Now, in this case, you wouldn't have been buying the up close off the BBC because you don't have any divergence to support it. But you do have a trend line, and you do have the blue area right here coming off a higher high. So you could have expected that to hold and give at least 1 bar's profit, which it did. Once it closed up, it gave you an up close on the other side of that trend line right here. You could have gotten long for this little move up right here. Okay, so you see the same things happening over and over and over and over and over again on all these markets. I mean, right now over here we have a little bit of bearish divergence. This is the trend line, okay, on the approach to the BBC, so it's got to get way down here and close below that. All right. Let's see. Hang on, I'm looking through the questions here now. Hang on. There, Jim, 1371. That question's not for me. That's for Dwayne. I think the 1371 number was either looking left or a fib number. I'm not sure, but Dwayne will have to catch that one. All right, Alan, is there a weekly zone down there? I don't know. What that you draw your trend lines. Okay, in the partners meeting, Frank. Just give me a list of things you want me to go over in the partners meeting. Anybody that's out there that's a partner, if you have anything you want covered in the partners meeting tomorrow night, just send it to us. Email it to us, support@cfrn.net. Okay. All right, that's it. Mike's in the room, so I'm going to wrap it up here. All right, again, if you have taken the free trial with us, I mean, if you haven't taken the free trial with us, but if you're, and you want to, go to www.cfrn.net/apply. If you are on the free trial and you want to become a partner, look in your inbox. You should have something from us in the inbox spelling out what it takes to become a partner. If you do not, or you can't find it in your inbox and you want to know, send us an email at support@cfrn.net. Okay? That's it. I'm going to wrap up the recording right here.